What's good, guys? Welcome back to my channel, and today's topic will be the Monday range. So I'm sure most of you are already somewhat familiar with the Monday range, but most people don't really understand truly how they can use the Monday range to their advantage. So that's why I thought, okay, I will make a quick video and kind of show you how I use the Monday range. So first of all, every trading week consists out of 5 trading days, right? So we have Monday to Friday, so we have 5 daily candles. Now, if we think about the weekly open, high, low, close, so if we open up a week, then we have Monday, and then we want to expect, okay, do we have a bullish bias or a bearish bias for the week? And then we want to position ourselves within either the manipulation to the upside or the downside, depending on what the bias is. And what I really like to use is the Monday range for that. Why? Because usually if I have a bullish bias for the week, I want to look for long setups that form below the Monday range low. And vice versa, if I'm bearish, if I want to look for sells, I want to see sell setups forming above the Monday range high. And what is the logic behind that? So let's say we have the weekly candle or the weekly range forming. Then we have Monday opening up. Let's say that's the Monday candle. And Monday's opening, right? So we have the Monday candle. Let's say we also have a wick here to both sides. So that's the Monday candle, right? So we might mark out the Monday range high and the Monday range low. So let's say I have a bullish bias for the week. If you want to know how to determine bias, then watch my video on how to determine bias. But for this video now, let's say we already have defined a bias for the week. So let's say the bias is bullish. And we also have a key level resting right below the Monday range, right? For example, we have the daily fair value gap or previous week's low, whatever, resting below. So fair value gap, key level here. Key level. So now we have the Monday range aligned with our key level, right? So now all we want to see is a manipulation below the Monday range low into the key level, and then we can scout for long setups forming right here, right? That's our POI then. And as mentioned, what is the logic behind the Monday range? So again, we have 5 daily candles which create the weekly candle. And let's say we have a bullish week. What usually will happen is Monday is building up liquidity, right? So it's a ranging profile usually. And you will see then liquidity building up at the range high and the range low. So we have buy side above the range high and sell side at the range low, right? So now let's say we open up the Tuesday candle or the Wednesday candle and we are bullish, and then we see now price trading below the Monday range low into the key level, right? And then that's where we drop to the lower time frames, to the hourly time frame, to then look for a setup to form. So if price is deviating the Monday range, then trading back into the Monday range high, ideally then the daily candle of Tuesday or Wednesday is again closing within the Monday range, then that's a nice confluence or a high probability confluence that price will trade back again to the Monday range high. And let's say you also have a higher time frame target. For example, you have an old and a weekly high, which is your buy side liquidity pool, which you aim for. Then you have here where you look for an entry. First target would be the Monday range high, and then the second target to look for longs or to take profit on your longs would be the higher time frame buy side liquidity pool. So again, let's say Tuesday's opening up. So next daily candle, say close like that, right? We have a wick let's draw the wick below the Monday range low into the key level. Then we close the daily candle here, and we have also maybe a small wick to the upside. So that's the Tuesday daily candle. So now we already have 2 out of the 5 daily candles which create the weekly candle, right? The Monday range, then we saw Tuesday, the manipulation below the Monday range into the key level, and then the Tuesday daily candle closing back inside the Monday range. Again, it doesn't have to be the Tuesday candle, it can also happen to be the Wednesday candle or even the Thursday candle, but it usually happens right after Monday, so Tuesday or Wednesday, as those are probably the days after Monday. So now Wednesday opens up, right? So what's the bias now for Wednesday? We hit the key level, closed inside the Monday range. So now what we aim for Wednesday is an expansion into at least the Monday range high. So Wednesday is opening up here. Say we trade the low, maybe we trade again, fill that a wick a bit here. As you guys know, or not know, if you have a large wick, the wick acts as a balanced price range. So you go down, go up, and this is all a balanced price range. So you don't want to see price closing back below the 0.5 level of that wick. So let's say we open up today here, go down, and then go higher, and then we start the expansion phase, right? Price going higher, and then let's say it also hits already the Monday high on Wednesday. And let's say we're also closing now above the Monday range high. So now if daily candle is closing here, then the candle will look something like that, right? We have the open, create a low, then we create a high, somewhere around here, and then we close the daily candle here. So now again, we look at the daily chart, and what is now the bias for Wednesday and for Thursday? The daily candle closed above the Monday range high. So now what do you want to see? We now want to see price holding the Monday range high and continue the expansion into the drawn liquidity on Thursday or Friday. Right? We don't want to see now price trading all the way back into the range. Again, that's something you can use the Monday range for as well. How is price behaving around the Monday range high and low? Is it going back into the range after taking out the range high or low? Or is price able to hold above the range high and then see a continuation? Because if you're bullish, you want to see price then holding the range high and then offering a continuation. You don't want to see price retracing all the way into the mid-Monday range. And obviously the same applies for the bearish scenario. You want to see price then holding outside of the range. In this case, as we are bullish, obviously at the range highs. So let's say Thursday is opening up. And again, we have the daily candle. We open up the day here. And let's say again, we go lower, a bit lower here, for example, make the low around here, and then we go higher. And let's say we also hit now the higher time frame target, which is this high, and then we close the day. Right? So the daily candle would then look something like that. So now you can see Monday we created the range, manipulation on Tuesday below the range low, close inside the range on the same day. Then we get the expansion of the Monday range high on Wednesday. Price is able to close at the range high, and then we see the continuation into the higher time frame target on Thursday, right? And in this case, on Friday, you would stay neutral for your daily bias. Why? Because price hit the key level or the target, and in this case, Friday could either go now for some internal liquidity, being, for example, now this fair value gap, which we left behind from Tuesday to Thursday. But price could also simply keep pushing higher, right? As order flow is still bullish. Meaning you don't have a clear bias for Friday. Let's say Thursday wouldn't have hit the higher time frame target, and let's say the daily candle would have closed something like that, right? It closed like here, and the high formed right around here. So now we still have the higher time frame buy-side liquidity pool being intact, right? And therefore, on Friday, we could still expect higher prices into this target. What do we have here? We have this fair value gap, and we have the previous day's high, right? So we have now two new targets which you could use to aim for Friday longs. So what could be the bias for Friday or the narrative? Remember, narrative is always how price is moving. Bias is just direction. And narrative will tell you the story how price is going to trade into that direction. So we have now the daily fair value gap here with the previous day's low. So what could be a potential open low high close for the next daily candle? It could be something like that. We open up the day here, right? We trade initially lower, tap into that fair value gap, and then start the expansion into the final target, and then close the week and also the daily candle. And then the daily candle of Friday would look something like that, right? So as you can see here now, I've opened up the DXY chart on the hourly, and you can see all those lines here, all those ranges I marked out, they are the Monday high and low, right? So we can check back how often does the Monday range actually play out. So the last week, you can see here with the Monday range low, Monday range high. Now we take a look at the weekdays, and what can we see here? We have a manipulation below the low on Tuesday, closing inside the Monday range. Then on Wednesday we see continuation higher, right? Then what do we see? Small pullback, and then continuation higher into the target, right? The higher time frame target. So exactly what I was just lining out in the theory is here the exact example, right? Then we go back 1 week. So what do we have here? Monday range low, Monday range high. What happens on Tuesday? Trade off Monday range high, and we don't get a Monday range play this week. Why? Because Monday was not a ranging profile, it was an expansion profile. Then Tuesday closed above the Monday range high, so it was unlikely to see Wednesday trading to the Monday range low because we had expansion on Monday. The next daily candle closing above the Monday range high, so therefore a retracement now all the way back to the Monday range low is unlikely. Again, we go 1 week back. What do we have here? Price is trading below the Monday range low on Tuesday, gapping up on Wednesday, closing back inside and expanding straight away to the highs. Closing above, large expansion. First day is a retracement profile, and then Friday continuation. Then another example. Monday sets the range low, range high. Tuesday trades above, closes inside. Then Wednesday takes out the Monday range low. Wednesday is closing at the Monday range low, and then you can see Tuesday is now consolidating around the lows, then going lower, and Friday we just have consolidation. Again, 1 week back, what do we have on Monday? It's a trending profile, right? We make a new higher high with a low to high, one trending profile. Tuesday is again closing above. What is Wednesday? Continuation higher, right? First day retracement back to the Monday range high. We hold that level, get a manipulation, a small deviation at the lows, and then a run higher. And you can see here we can go back all the way. Price consolidates inside, gets above. Daily candle closing above, so we don't expect the return back. Price goes higher. Monday range trades below, closes inside, goes to the high. Closes above, continues going higher, right? Monday range is trending again. Tuesday closing above, continuation. Another example here. So you can see the Monday range plays out quite often, and simply by looking at, okay, how is the Monday range setting up? What is the market profile of the Monday candle? what is the bias, how is the next candle closing, are we closing inside of Monday range, outside of Monday range. It's a simple framework to give you an idea of what might be the narrative for the rest of the week. So what are the takeaways from this video? Monday range is quite simple. You can use the Monday range not only to anticipate when is Monday going to make the low of the week, right? It's trending profile usually. If Monday is a range profile, you always want to consider a Monday range play by the next daily candle, how it's closing. The second point is you can use the Monday range high and low as liquidity pool targets, right? If we deviate the lows first, then you can aim for the high and the other way around. And if we deviate both sides of the range, then you should maybe stay out of the marketplace, right? Because this could indicate a seek and destroy profile, right? If we take both sides of the range high and low, and we close back inside the Monday range, it's likely to see a weekly seek and destroy profile. Let's take a look if we can find the example where we take out both sides of the range and close back inside. For example here, take on the low first, then the high, closing again, low, high, closing again inside, low, almost high. As you can see, seek and destroy inside the Monday range. And we can find another example here. Monday sets the range high and low, taking out the highs first, then the lows, closing back inside the range. Next day low, high, close to the range. Next day high, back to low. So seek and destroy. And yeah, that's all we did for today's video. I hope again you could learn something new. And if you did, then I would appreciate a comment and see you in the next one.